Sterling has suffered its biggest move since the UK referendum result in June. How it happened remains a point of discussion, but it began to recover almost immediately. However, it remains below where it was before the precipitous drop overnight. Tom Floyd, an FX trader at Foenix Partners, joins us now with some more. Tom, welcome. Before we get on to where the currency is trading at the moment, there's been a lot of speculation as to what's behind this fat finger algorithmic trades or some sort of black box trading system. Your best guess, we don't know what it is at the moment, your best guess as to what caused it?
To be honest, the post-mortem of these sorts of incidences, these flash crashes, can take months to delve through the detail and delve through the data. At this point, we don't know. The markets are currently looking towards algorithmic trading. Now, it often is a dirty word, but it's important to note algorithmic trading is not a dirty word. Algos work within set parameters, and it often is a degree of human error which contributes to cases such as these.
Yeah, okay, so we're talking here about computer systems, aren't we, that follow trends and make trades?
Indeed. Typically speaking, they're automated, computerized systems, and they are designed to increase trading efficiency, trading speed, and also to remove an element of human control and therefore human emotion.
Yeah, and the word flash crash,
yeah.
What does this mean?
Effectively, what it means is a very, very quick reversal of a particular trend, which is unexpected, which has no bearing in fundamental or technical data, and therefore can't be explained. It's often the buzzword for when we don't actually know what happened.
Okay, all right. Let's look at a chart. We got sterling dollar here, which is quite often referred to as cable. This is a daily chart showing the entry point into what has been this long box here, and that was, of course, when the referendum result came through, which spooked the markets. But since then, it's interesting. Actually, this is the trade here, and this that long tail of the candle is that immediate trade that took it right down. This is a daily chart. What I want to do, Tom, before we get your comment on this, I want to go into the 10-minute chart because I think this says something else that's gone on here. There's the 10-minute interval where we saw that overnight. And since then, there has been a little bit of sideways movement. How do you feel about where we are at the moment? We're currently at what, 122.80.
Typically speaking, after events such as these, you would expect to see a reversal, immediate, back to the level of which it went out at, and that is across every single asset class. The problem here that sterling has is that it is in a long and protracted negative downtrend, which has nothing to do with economic data whatsoever. It's all about political and market negative sentiment. The problem that the flash crash overnight has caused is that it has removed any sort of technical support that the currency pair would have enjoyed yesterday. So in terms of where could the currency go from a technical perspective, the trend could well remain negative. Personal view, I think actually sterling is looking very much oversold, and I would expect to see a bounce.
It's interesting, at the top left-hand corner there, we've got the sentiment wheel from the IG platform, 62% long. I mean, we've got a little bit of a downturn here on the far right-hand side of the chart. It'd be interesting to see what happens to that in the next couple of hours or so, but that would seem to weave in well with your thought on where things are. Absolutely,
absolutely. As I say, you know, the data that we've seen this week suggests that actually the UK economy is on track. However, political machinations from the UK and from European leaders have not supported sterling whatsoever. The sell-off we've seen this week looks oversold so far.
Yeah, let's look at sterling against the euro as well, because it's a very similar sort of picture. And indeed, again, the daily chart here showing that entry into this sideways move, and then today's move, exactly the same thing. And I think the sentiment wheel will show exactly the same. You mentioned Europe. I mean, Europe is not without its problems, let's face it.
Europe is littered with problems. Technical things aside, you only need to look at the problems that Deutsche Bank are having following the problems that Banco Montepaschi had previous to that. All of these scenarios should suggest a weaker euro, a weaker European bloc. They should suggest sterling euro moving back to the upside. Unfortunately, the market is not focused on the euro and the weakness of the euro area. They are focused solely on the politics of this so-called hard Brexit. And to be honest, we're very much at the start of pre-negotiations. It's unsurprising that the Europeans and the UK are both playing hardball. Yeah. The pound is unfortunately the
one that's caught in the middle. Yeah. Okay, let's go back and talk about cable, because that's one of the most common pairs. What about where this is going? I'm hearing a lot about where it could settle. 115. Yeah. A lot of people are talking about. In fact, I've even heard people talking about 140 ultimately when it comes back. What's your best case for sterling as we move out from this point here over the next couple of months or so?
To be perfectly honest, I think in the next couple of months and probably into Q1 of next year, I would expect expect a 125 to 130 to kind of be the range in which we're trading. Unfortunately, well, if you're long cable, that is, the US is on a completely different part of the rate cycle as we are. So actually, that's only going to be adding further downside pressure to the cable rate. Yeah, so I don't see any reason to be breaking up above 130, but down here we should see some sort of recovery.
There's always two sides to a trade. Talking about the US, economic data aside, there's a big political event coming up.
Yes,
how much of a disruptor could that be to trades for sterling and the US dollar?
I guess the main point with the US elections is that actually it does interrupt the Fed rate cycle. Now, the Fed is meant to be non-partisan. Whether that's true or not is anybody's guess. But the fact of the matter is, it's very, very unlikely that any rate hikes happen in November whilst there is an election. And actually, that does just kind of put things on the back foot from an economic perspective for cable. OK, all right, Tom, it's a pleasure. Thanks indeed for taking time out of what is obviously going to be a very busy day. Tom Floyd there from the trading floor at Foenix Partners here in the City of London.